blockchain. Things are about to change. Open up the gates. Systems get replaced. Bitcoin, decentralize the trust. Security, transparency. The network's run by us. Bitcoin.
Hello and welcome to the Bitcoin.com podcast. This is your host, Zach Doty. We have Timo Schlaefer here today from CryptoFacilities. He's the CEO there. He was formerly at Goldman Sachs. Timo, welcome to the show.
Hi, Zach. Thanks a lot for the invitation. Happy to be here.
Oh, thanks for joining us. So tell us about your background with Goldman Sachs. You were the director of credit quantitative modeling there. Is that correct?
Well, I wasn't the director. Unfortunately, director is a pretty common title. So I was a director, and I worked in credit quantitative modeling, mostly CVA modeling. I'm not sure whether you're familiar with that, but CVA is essentially the expected loss that you have in a trade from your counterparty not being completely credit risk free. So whenever you put on a large, maybe even longer term structured trade, then you need to figure that into the price, and that's what I was doing there.
Okay, and so you've brought your experience with derivatives into CryptoFacilities, and CryptoFacilities, for those who haven't been on the platform, is a professional trading platform for Bitcoin derivatives. So you're based in London, and they're one of the only insured exchanges, which I find is very interesting and great, and they have up to 50x leverage. So tell us about your exchange and what currently you're offering for trading pairs on there.
Sure. So we, as you said, we are based in London. We have a trading platform for derivatives on digital assets. So right now it's still just Bitcoin. We launched about a year ago, but that's going to change pretty soon. And we started with the simplest conceivable product out there because Bitcoin is very new. Bitcoin trading is relatively new, and then derivatives on top of that is even newer. So I think it makes sense to start with the basic building blocks. And when it comes to derivatives, that is essentially futures products. So a future is a very simple derivative. It's a linear instrument. If you buy a future, it is future on Bitcoin. It is relatively similar to buying Bitcoins. Obviously, it's not the same, but it's similar. So if the Bitcoin price increases, the futures price increases by a similar amount, and the other way around. So that's what we have right now. We have one futures product that we have had since we launched, so for about 14 months, which has worked really well, and that has pretty conservative leverage. We can talk maybe about that a bit more in a bit. And then recently we started a similar product, but with higher leverage, so more suited to short-term speculation, essentially.
Now, I think being insured is one of the biggest differentiators you have from a lot of the other exchanges, which Bitcoin ecosystem is very much developing. There's a lot of gray areas and uncertainty, and it seems like a lot of exchanges just get up and running, but you guys have managed to be insured through a partnership with Elliptic. Tell us about that.
Yeah, so, when we launched the company or thought about launching it, there were all these unpleasant things happening in the Bitcoin space, with Mt. Gox losing a ton of Bitcoins and some other occurrences. And therefore, for us, it was really important to make sure that whatever money, in Bitcoin form we take from our clients, that this is really absolutely safe. So we didn't want to take any risk there. And what we have done to achieve this is when you send us Bitcoins, we don't store them. I think it's not the core business of our company to store Bitcoins. So we send these to Elliptic. Elliptic is a London-based custodian for digital assets. And all they do is essentially store these assets very safely. So they have offline vaults that are in secured locations where they keep the private keys. And they are also, I think, the only one or one of the very few ones that have gotten real insurance from an A-rated company. So whatever Bitcoins they hold, they are insured. And if there ever were a operational issue with them, then that would get replaced by the insurance company, at least US dollar value. So, that makes us feel pretty safe that the Bitcoins that we hold on behalf of our clients are safe.
Well, that's great to see that, and I think other exchanges should definitely follow your lead and obtain some kind of insurance. You guys also do proof of reserves where you can audit those Bitcoins are fully segmented into different addresses, so you can see that the Bitcoins don't move on the blockchain. So, and recently you guys have partnered up with CME Group. Now they're one of the biggest options and futures exchanges with a $32 billion market cap. Tell us about what's going on there. You're partnering up with them for an index, is that correct?
Yeah, that's right. So CME is, as you said, is one of the largest, maybe the largest futures exchanges. They're based in Chicago originally. And, I think it is really interesting that a company such as CME is interested in Bitcoin and the whole digital asset space, but in particular also in Bitcoin. And for us, it's, obviously great to partner with them. And the project we are working on right now is the development of a couple of Bitcoin price indices. So, we think that the Bitcoin or the digital asset space, this new asset class of digital assets, Bitcoin being one of them, in order to move this asset class forward towards the more, institutional audience, the more professional players, one key thing that is really necessary is a reference price for, in this case, Bitcoin, that is really universally trusted, that is overseen by a supervisory board in this case, and that is, follows the regulatory guidelines around index construction that you also see in the traditional space. I think without an index like that, it's relatively difficult for some players to move into the space, because there will always be a dispute. What is the price now at this moment of Bitcoin? There are so many exchanges that trade Bitcoin, so you really need to have one reference price.
For sure. I think a lot of non-traders might not realize the significance of getting that index. And for a derivatives contract, that's pretty much everything that matters. The derivatives and the contract, or the price and the contract itself, are the whole trade. So that's a big move forward, and I'm looking forward to that development. That's September this year. Is that the beta for that?
Yeah, the go live for the public beta is September. The plan to launch so it's two indices, to launch these two indices, in a final version is November. And as you said, the reason why these indices are really important is that when you have a derivative on Bitcoin, you need to have some sort of, it's called an underlying, which this derivative really references. So if you have future on Bitcoin, it has to reference something. And for that, you need a stable index.
So tell us about the Bitcoin ecosystem in general, especially as it relates to derivatives. What derivatives are still missing in the ecosystem? What would you like to see develop? Maybe what would you add to your platform? Maybe some nonlinear derivatives in the future?
Yeah, I mean, that's a good question. I mean, there is essentially everything is missing still, right? There isn't much out there. The only thing that is essentially out there is futures. But the space is still so new that, I think it takes some time until it makes sense to really create more sophisticated products on Bitcoin. But, I mean, there are certainly things one can look at. I think options would be something really interesting. I don't think there is, maybe there's one wide of options. I'm not sure, but it's certainly not, widely available. And pretty interesting to trade, obviously. With the high volatility of Bitcoin, options essentially are a tool to trade this volatility. I think, it would be a pretty interesting instrument to trade. The other thing is, Bitcoin has a couple of new risk factors that you can potentially trade that didn't really exist in the traditional space before. I'm thinking of difficulty risk, for instance, for miners. So, I think that should be something where miners would be interested in, like some instrument to trade difficulty. They have all these mines. They don't know exactly how many Bitcoins they're going to mine because the difficulty is unclear. So they could use this to get rid of that risk factor. Obviously, the price is also, unclear to them. By the time they've mined the Bitcoins, they don't know where the price is. But for that, they can potentially use the futures.
Right. So if you could do future contracts for both the price and the difficulty, then you could potentially have a almost no risk method of investing in mining and knowing exactly how much your production is going to be and how much you can sell that production for upfront at the same time when you buy your mining equipment. That's very cool.
Yeah, that is exactly the idea. You would be able to calculate your cash flows and your revenues pretty precisely, assuming that you have these, instruments and they are really actively traded. But I don't think we are there yet. So let's see.
And so previously you called your contracts forwards, and so now I see they're futures, and that's a new development.
Yeah, when we launched the platform about 12 months, 14 months ago, we called the product a forward because it wasn't really clear how it is regulated here in the UK and in Europe. And since then we have been talking a lot to the regulator here in the UK. It's the Financial Conduct Authority. And at the end of this process, it became clear that this instrument is going to be regulated essentially in the same way as other futures on other asset classes. So it became clear that it's a future, and for that reason we renamed it. I think it also makes sense because it's a bit easier to understand what it is if you call it a futures. But from an economical point of view, it's pretty similar. Yeah, but that's the rationale behind that. So we are relatively proud to say that we have the first and only regulated futures on Bitcoin.
Great. And now your margin engine seems to be pretty good so far. You guys haven't had any margin failure. Some of the other exchanges have been criticized for that, but you guys haven't had any such incidents so far. Is that correct?
Yeah, so we are really happy with the margining system that we have. The low leverage, 6x leverage futures that we launched 14 months ago never had any credit event. So we never had any margin shortfall in that. So I think that's really good. So that, essentially means you can rely on it if you use it for hedging, that the trade really performs. Now with the higher leverage futures on Bitcoin, we call it Bitcoin Turbo. It has 50 times leverage, which we launched 2 months ago. We expect that we will have margin shortfalls in some cases. And actually, since we launched it, we had it twice because the leverage is just so high. But the margining system is, set up to cope with these margining shortfalls and, handle them in a way that if your counterparty doesn't put up enough margin and is essentially stopped out, that you should not suffer a loss. It's clearly higher risk than trading the regular future, but this is what some market participants want to trade. They want to have a higher leverage and are comfortable with a bit of additional credit risk.
Yeah, and I think a lot of exchanges have been criticized for their socialized losses for margin failures. And then there's BTCC, which has a very unique approach to it, the early profit assignment. But will you guys have any kind of socialized losses on this, or you don't expect that to ever be an issue?
No, our systems are set up completely differently, so I don't think we'll ever have anything similar to socialized losses. We manage every trade individually between buyer and seller. If there ever is an issue, which we never had for the futures, but if there is an issue, then the issue will be taken care of between these two counterparties. So we don't pool the risk together in some big pool. And then, there are many variations of how these socialized losses are managed. And I'm not a big fan of it. I think it's pretty intransparent. And you can't really rely that the trade that you put on will actually, perform.
Exactly. Yeah, I never was a fan of socialized losses, so that's good to hear that your margining system is better than that. So Bitcoin has been quite interesting. The price has obviously been very volatile in the last couple of weeks, going up quite a bit. Any thoughts on Bitcoin's development over the next few years? If I guess you guys try to stay pretty net neutral in everything.
Yeah, I mean, I'm extremely optimistic at the moment regarding Bitcoin and the next couple of years. I think there's a lot in the pipeline that's going to come down pretty soon, of big established companies joining the space, and they haven't even started doing that. And Bitcoin is still so small, the amount of Bitcoins is so limited, and in particular, the amount of freely traded Bitcoins is extremely limited. And we haven't even seen the beginning of any major player moving into space. And, if that happens, then I think the impact for Bitcoin will be great. The money we are talking about in Bitcoin is, the Bitcoin market cap is so small compared to what these players are used to. So I think it's, I'm very optimistic. And, I know of a couple of larger companies having plans to move into the space.
That's great. Now, you guys are doing your seed round right now. Is that correct?
Yeah, we are doing our seed round. It's almost done. So fingers crossed. Yeah, pretty happy about that.
Great, cool. Any thoughts on the halving? What impact we mentioned earlier derivatives on difficulty, because that's a big unknown. The halving is an even bigger impact potentially because it's so abrupt and potentially part of the motivation behind the recent bullish sentiment in the market. So what are your thoughts on the halving and if that'll have any kind of an impact?
I think that, it's a pretty interesting question. Normally, it has been known that a halving is going to happen forever, right? So you could have known that 9 months ago. And normally, in an efficient financial market, that should be priced in relatively early if it's known for certain. So normally, when the event happens, you wouldn't expect anything to happen anymore because it has been already priced in. Now, Bitcoin is maybe a little less mature than what you see on the established financial markets. So I'm not certain what's going to happen. I wouldn't be surprised if there would be another price bump resulting from this. People are not really aware of what it really means if only half the Bitcoin supply is come on the market.
Yeah.
So we'll see what's going to happen.
Yeah, I think Google Trends, I was looking at that and seeing how few people had searched for halving prior to just a couple months ago. So not sure if the public is even fully aware at this point what that means yet. And I think it'll be interesting. It'll be fun for sure. So any plans to add options for Bitcoin?
We have been thinking about this a bit. I think we are going to add a couple of other products before looking at options. Options, as I said, are really interesting. It's not the easiest thing to get a market going on for a number of reasons. So what we are going to do in the relative near term future in the next 2 months is derivatives on Ripple XRP. So we have a partnership with Ripple that was announced, I think, 3 months ago. So we'll be the exclusive marketplace for derivatives. So we'll launch futures on, I think, Ripple XRP versus Bitcoin and Ripple XRP versus US dollar. And you'll be also able to trade these with your XRP. And the other thing we are going to launch is Ether. I think Ether is a pretty obvious thing to look at, getting a lot of traction. It has substantial trading volumes, and in some days it came quite close to Bitcoin. So in general, it's our objective to cover the main couple of most important digital assets.
Well, that's cool. And, right now derivatives are a big thing with equities. And of course, the DAO is kind of challenging the traditional idea of an equity and giving some kind of a new form of collective participation and ownership of these DAOs. Be interesting to see some futures develop around that. And of course, I think the most important thing there is almost an oracle for the price, the index. And that gets back to what you're working on with CME Group. The rest can actually be potentially smart contracts in the future if it's on Ethereum. And now, of course, Ethereum virtual machines can run on Bitcoin with Counterparty and the testnet for Rootstock. So very exciting times we live in. And that's awesome. So looking forward to those developments. Looking forward to, of course, I'm in the US. So to all those who are not in the US and can trade your platform, I think you guys are available everywhere but the United States for regulatory reasons.
That's right.
And so what is the regulatory environment right now for futures trading outside the U.S.? It seems pretty open, but in the U.S., is there any plans to launch there, or is it just not an immediate priority because of the regulatory burden?
It's a pretty interesting topic. The thing one has to understand is that the regulations for derivatives on Bitcoin and other digital assets, They are essentially completely separate from, regulations for Bitcoin spot exchanges. So Bitcoin spot trading is essentially unregulated. You might have some rules regarding money transmission. You might need money transmission licenses and stuff, but the trading itself is essentially unregulated, essentially everywhere in the US and also elsewhere. So for derivatives, that's different. So as soon as you start putting a derivative on top of Bitcoin and then you trade this derivative, then all of a sudden it becomes regulated and in some cases highly regulated. And I think to sum it up, I haven't seen any softening of regulation, derivatives regulation when it comes to derivatives on digital assets. So essentially the regulation that is applied both here in the UK and in Europe and also in the US is the same as you have for derivatives on the traditional asset classes. So in the UK, we have gone over this hurdle. Took us some time, but we got over it in the UK. In the US, I think it's very difficult for a new entrant into the exchange space to get over that. In particular, if retail clients are involved, because the regulations are really, really tight. You need to fulfill a lot of things. You need a clearinghouse. If you have a futures that is made available to retail investors, so that's a pretty tough nut to crack. So we'll see what's going to happen in the US.
Well, with the CME Group index, it seems that they might be in a good position to start providing some kind of futures for Bitcoin in the US.
I can't really, comment on the plans that they have, but, I think, in principle, it would make sense if such a product is just based on, the existing infrastructure that is out there. I mean, there are companies that have the relevant permissions and so on.
And I don't really think there are any alternative futures platforms for Bitcoin that are easily accessible in the US. I think BitMEX is another popular one that, again, is not for those in the US.
Yeah, there is one swaps execution facility in the US that trades swaps on Bitcoin. That's very similar to a forward. But yeah, I don't think there's anything.
Is that Terra Exchange?
Yeah, exactly. I don't think there's anything that is legally and readily available to retail traders.
Well, great. Thanks so much for joining us on the Bitcoin.com podcast. Again, this is Timo Schlaefer, CEO at CryptoFacilities, and they're really innovating and setting the standard for what it means to be a professional derivatives exchange in the Bitcoin space. So thanks again for joining us, Timo, and glad to have you on the podcast. We'll have to have you again on soon.
Thanks very much, Zach.
Blockchain. Things are about to change.